Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. Welcome back to another week in the crypto markets, guys. We have had quite a surprise to the upside today. Apparently, there was $1 billion of short liquidations in the market, and Bitcoin is making its way to the upper 60Ks right now. But in some other news, Citi announced yesterday, Citibank, that they're going to be launching Bitcoin custody for institutions sometime this year. Definitely big for them. The other big news out as of yesterday was that the SEC is officially putting out some initial regulations for crypto, including provisions to essentially sell tokens to retail investors, plus offerings, plus exemptions for specific offerings. If there's under a $5 million offering, I believe there's no requirement to file, and businesses can raise up to $75 million per year. So those are still getting fleshed out, but that is making our headlines this week. As always, though, we are here to talk about the tokens, so I will get to it. The first step, we're going to talk about Compound. So on Monday, Compound, one of the oldest lending protocols out there, announced a new leadership team along with a $52 million budget as it looks to tackle a new era. So basically, the protocol intends to kind of shift its focus really heavily to catering to institutions offering real-world assets, RWAs, our favorite buzzword here, partner integrations, and credit infrastructure. So to date, Compound, was launched in 2018. It's been around since really the beginning of DeFi. It has been heavily retail focused. And so this new shift is to essentially enable more institutions to come in and use some of this credit infrastructure to their advantage. The new leadership team does hail from Coinbase Custody, Maple Finance, the Near Foundation, Anchorage, HSBC, and Broadridge Financial. And again, bringing in a whole new crew here. Just to give you some context, Compound at one point they held $12 billion in TVL. They now have just 1.3 billion, and they rank by 6th in TVL. At one point, they were number 1. So just also for context, even though the lending space has fallen like 50% in the last year, Compound in particular has really struggled to keep up with the likes of Aave. They're at 15 billion TVL, Morpho 8.4 billion in TVL, Maple 2.4 billion in TVL. And these guys have all cruised past them in the last year. So Compound is really looking to make a comeback here. There has been some discussion, though, that $52 million budget that was awarded to the foundation essentially was voted through with a significant large vote from the Compound Foundation, asking a lot of folks asking once again, decentralized governance, does this really work? Does this even make sense? But we shall see. So Compound is up about with the market 9.8% for the week. The real question is, are they going to be able to stage this comeback with this nice new budget? Time will tell. Okay, next up, we are going to talk about Lido. So this past week, Ethereum staking provider Lido finally launched a buyback mechanism for its LDO token. So the buyback is programmatic, and it's going to be tied to Lido's revenue, ensuring that the project has sufficient operating capital before returning these excess revenues to token holders in the form of a buyback. So the buybacks are going to be initiated when annualized revenue exceeds $40 million. And then after that, they will take 50% of that daily surplus, and that will be added to a system called Nest. Nest will then purchase LEO tokens on the public market, maxing out at $50,000 in purchases per day and $10 million of purchases per year. So Lido's revenue does come from Ethereum staking rewards. So basically what happens is people go there, they stake their Ethereum, and Lido takes a small cut of that. But what that means is that because their revenue is in not dollars, but in Ethereum, it's going to fluctuate with the market, as one would expect, with the price of ETH specifically. Hence the need for this system, which they're calling Nest. Because basically their annualized revenue at one point could be 30 million, but then if ETH has, a 100% move, then it's 60 million in annualized revenue. Currently Lido has annualized revenue of $37.7 million, which means no buybacks would be executed under the current conditions. The Lido community has really waited a long time for this particular protocol change. The token has been live since 2021, but the market reaction so far, it's been pretty muted. The token is up about 10% this week. Okay, next we're going to talk about the Ansem meme coin. I know, but on Monday, the crypto influencer that just goes by the name of Ansem launched what is called the Z500, which is an on-chain meme coin index. So basically, the index is built on top of Pump.fun, which, if you're not familiar, that is the leading meme coin launchpad on Solana, and it's meant to be a discovery leaderboard for token launches. So basically, what it does is it ranks projects based on performance and their own alignment with Ansem's own meme coin, Ansem. So basically, newly launched meme coins will launch through Ansem.io, and that uses Pump Fund's underlying mechanics for it. But it will automatically airdrop 3% or more of that new meme coin supply to the Ansem holder token holder base. Sorry. Teens can then choose to buy and burn Ansem tokens to unlock gold and diamond tiers. So essentially what that does is it offers projects greater visibility on the leaderboards and kind of various marketing channels. For those who aren't really familiar with the meme coin market or don't follow it that closely, thousands and thousands, hundreds of thousands of meme coins are launched per day. And as a result, it is extremely difficult to discover new credible meme coins among the many launches. By requiring these teams to basically pay up front to their own cash to buy and burn Ansem and kind of initiate that marketing spend, it just gives them more skin in the game. The idea is that it should build trust in their commitment to the project, and it provides visibility through that broader Ansem ecosystem. So potentially win-win for everybody. As a result, it also means that the Ansem holders are getting rewarded by that airdrop, and they are also seeing some of the Ansem taken out of the circulation and burned. So far, 1.77 million Ansem, representing just under 0.2% of the supply, has been burned. Again, this has been live for 3 days now, so we shall see. The Ansem token, though, it's up 13% this week. Okay, last up, we're going to talk about ETHFI. So ETHFI is a crypto neobank. They saw a huge price run up this week following the launch of several new features. So most notably, ETHFI has launched trading and borrowing capabilities to its existing app interface, which already provided card spending, where they allow users to spend their crypto via a debit or credit card, and earning, which is where they allow users to earn yield on idle balances. So users can now trade crypto, tokenized stocks, and metals, and take out portfolio-backed loans via an integration with Aave, the largest lending protocol we talked about a lot. Finally, the protocol did announce that they're planning to introduce programmatic ETHFI buybacks from all of these product lines after a formal DAO vote is passed. That is yet to happen. Estimates, though, from the team project that 1.33 million of revenue will be available for buybacks per month, indicating annualized revenue of about 15.96 million. Just to do the numbers, though, guys, at the current market cap of 392 million, ETHFI has a 25x price to sales, indicating it might be trading around its market value. It really just depends on where you see ETHFI's growth going in the next 12 months. Like I said, though, ETHFI has had an insane run up. It is up 30% this week. All right, guys, I hope, thanks for joining us. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.